Hey everybody, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to make money work hard for you, how to grow your money and invest your money. If you like what I'm doing, please check out my other videos. Consider subscribing, give a thumbs up. It really helps out the channel. All right, today we're talking about 3 stocks that I'm buying currently, February and March of 2020, throughout this whole stock market correction that we're having with the whole CV situation. The biggest current news, the whole situation that's going on worldwide. So I am not sitting on the sidelines. I am deploying my money to make it grow. This is the best time to put your money into the market. Stock prices are at all-time lows. There's no reason not to deploy any extra cash you have at a steady pace, so you are getting a good cost basis on your stocks. All right, so let's get started. The first stock right here is 3M. On the screen is the chart of 3M for a 6-month period. So it has dipped down to 153.30 as of this recording. I started getting into this stock at the lower 140s. So right now I wouldn't buy personally at 150s. I like to see it drop down to at least the lower 140s. Every time it does dip down to the lower 140s, I will be picking up additional shares. So this stock is beaten down, but not as much as all the other stocks in the market currently. Some stocks are seeing 40% drops, 30% drops. So 3M right here for a 3-month period is only down 11.63%. Year to date is down 16%, and for a full 1-year period is only down 28%. And that's pretty reasonable considering some other stocks out there, like I said, where you're seeing 40%, 30% drops, especially in the travel and tourism industry and also the banking sector. So this is taken from 3M's fourth quarter 2019 report. So they didn't have a really good fourth quarter report. Most of their numbers are actually in the negatives. So you see right here, GAAP earnings per share was down 26.9% year over year. Their organic growth was down 2.6% year over year. Operating income margin is down 6.1 points. Their adjusted earnings per share was down 15.6% year over year, and their operating income was down 3.4 points year over year. So needless to say that their fourth quarter was not stellar at all. And because of this fourth quarter, you did see their stock drop, and their stock dropped even before this whole CV situation started. So they're already on its way down, and the CV situation just kind of exacerbated. So now to me, their valuation is very interesting, and their dividend payout is now getting to be interesting for me to start getting into. So 3M's a huge business. They're in multiple sectors. They're in the safety industry. They did see a negative 2.8% decrease. They're in transportation, electronics, and healthcare and consumer staples. So you see all the numbers reported negative except consumer staples, which basically was flat. So these are some of their consumer staples. You know, 3M does Post-it notes, does filters, and their healthcare related things right now. Their biggest thing is their masks for N95 masks. Specifically, there's basically a worldwide shortage of these masks for obvious reasons currently. So let's take a little deeper dive into their numbers. So their sales actually grew 2.1% year over year for the fourth quarter to 8.1 billion from 7.9 billion. All their other numbers were negative, as I already mentioned. So also let's look at their assets to their debt. So for December 31st, 2019, they had 44 billion in assets and they had 34 billion in liabilities. So they have a nice $10 billion. So that's always good to see. If things start getting worse and worse, they will be able to pay off their debt and stay afloat. This is the same numbers, but in the chart form from 2014 to 2018. Their revenues is roughly in the lower 30 billion. And here's their dividend. Their dividend is always growing. I believe they've been growing their dividend for 61 years now. So from 2014 to 2018, you see the growth from 342 to 544 per share. Here's their payout ratio, 61.9% payout ratio, which is not the lowest, but definitely not the highest. So we like to see a payout ratio, the lower the better. The lower the payout ratio means the more cushion that they have to continue paying out this dividend. So you see they've been growing dividend for 61 years, and the current dividend is 4.08%. So what's causing the stock to go down? I think that's pretty obvious. It's the huge issue going on around the world right now, and it's causing tremendous fear and panic in the stock market. So all these investors are deciding to sell out of their shares, and that's what is bringing the price of all these companies down. And that is personally, in my opinion, the best time to get in. When everyone is exiting, running for the doors, and selling off their shares, the price drops and everything is on sale. So one of the things that I'm banking on 3M's growth is for their health sector, obviously. So everywhere you look right now, it's impossible to get any masks. They're all sold out. And you look on eBay, some people are selling these masks for $100 for like a 5-pack. So right here, we'll see like a 20-pack, $60, a 10-pack, $80. So, I mean, this is going to happen throughout history. People are going to price gouge. I don't agree with this. That's kind of like capitalism going crazy. I don't think capitalism should allow people to take advantage of situations like this, especially when it's people's health and lives at risk. But it is what it is. People have been doing it for hundreds of years. It's continuing to happen. But as far as investing in the company itself, I think that's fair game. Investing in the company will help the company grow. And so that's why I'm interested in investing in 3M right now. So again, once again, here's their stock chart. Their current PE as of today is 19.63. So again, right now they're trading at 153. I was buying it at early last week and the week before, I believe, for in the lower 140s. So every time I do see 3M dip down to the lower 140s, I do pick up shares. If it drops even below the 140s, definitely pick up shares. All right, next one, company number 2. I talked about this in other videos. The next company is Carnival Cruise Line, CCL. Here's their stock chart. They've been just taking a complete beating. I mean, the whole sector, travel and tourism, airline industry, hotels, hospitality, and definitely the cruise line has been taking a tremendous beating. Their stock has dropped down to $23.33 as of today. It was even lower than this, I believe, just a couple of days ago. It was in, I believe, $20, $21 range. So their PE now is incredibly low, 5.39 for their PE, and their yield is up to 9.2%. Those numbers are just insanely cheap right now. So Carnival Cruise Lines is the biggest player in the cruise industry. They own a lot of other companies. So here is AIDA, Carnival, Costa, Concorde, Holland America, P&O Cruises, P&O Australia, Princess Cruises, Seabourn. Those are all under Carnival's umbrella, so they are definitely the biggest player in this sector. So let's take a look at their numbers. So revenue from 2015 to 2019, you see the steady growth, 15 billion in 2015 up to 20 billion in 2019. So that's definitely something that I like to see, a steady revenue growth. So how about their bottom line? Their net income, again, a steady growth, 1.7 billion in 2015 up to 2.9 billion in 2019. They did take a little dip from 2018 to 2019 from 3.1 to 2.9, but that's not a huge dip at all. And you see their passenger rates, 10.8 billion from 2015 up to 12.9 billion, and that's a steady increase. So like I said, Carnival is the biggest player in the sector. Comparing Carnival Cruise Line to Royal Caribbean here, this is both their charts. So you see Carnival Cruise Line's market cap, 16.57 billion. The next biggest player is Royal Caribbean at 10.77 billion. And so the PE ratio comparing the two, 5.39 for Carnival Cruise Lines, 5.76 for Royal Caribbean. So their PE ratio is relatively close, but Carnival Cruise Lines is paying that nice 9.20 dividend yield, while Royal Caribbean is only paying 4.74. And probably the third biggest player in this market is Norwegian Cruise Lines. Their PE is down to 4.62, but they're not paying a dividend yield. So that's what makes Carnival a lot more attractive, their big dividend yield, and the fact that they're the #1 player in the market. Also, I'll show you right here. So this is a snippet of their balance sheet. So the balance sheet of Carnival Cruise Lines is much stronger. So they have $518 million in cash that they could deploy to hold them over for any downturn, any recession, compared to only $243 million for Royal Caribbean and $252 million for Norwegian Cruise Lines. So when things get bad and these companies need to pay their debt, Carnival Cruise Lines sits way above the other guys with a lot more cash on hand. So here's a shot of their newest ship. Is the Mardi Gras. I believe it's still under construction. It might have been delayed, and obviously because of the current situation, that might be even delayed even longer. But just look at this ship. It's amazing compared to their ship from 1972 to now their current ship 2020. That's just gigantic. I looked through the slides. The ship looks amazing. There's a roller coaster. There's obviously tons of pools, and there's water slides. Of course, there's a spa. They have all kinds of games for entertainment, like Family Feud. So yeah, that's my thoughts about Carnival Cruise Lines. One thing that people worry about is what if they go bankrupt? You know, if this situation gets worse and worse, no one's going to travel. What if they just burn through all their cash and they go bankrupt? What happens then? My thoughts are, I don't think they're going to go bankrupt. I think if they need money, they will be able to get loans from the bank. I mean, the big banks hold all their debt, so there's no benefit to the banks, to the shareholders, or to the company if they go bankrupt. So I believe if they do need money to hold them over to get through this whole situation, I mean, interest rates are at record lows. I don't see any reason why the bank would not loan them money to hold them over, especially since their numbers are good, they're profitable year over year. So if they lend them money to hold them over, they'll be able to pay the money back with interest and continuing on making money after this whole situation is over. So I just don't see them going bankrupt, especially the biggest player in the market here. All right, so that's my thoughts on number 2, Carnival Cruise Lines. Number 3, I talked about in my previous video, so I'm not going to talk about too much right now. I'm going to link the video below, but number 3 is Disney. So check out my other video where I went into more detail about Disney. I'll link in the description below. In that video, towards the end, so probably the second half of that video, I talk about Disney, so you could go ahead and check that out. But I'll go over really quick my thoughts on Disney. As of recently, Disney was trading for $104.35. That is much lower than what they were trading at after the Disney Plus launch. The Disney Plus launch was a huge success for them. They're raking in about $2.3 billion just on Disney Plus. The market is actually pricing Disney lower than the Disney Plus launch, back to the same prices that they were going at December of 2018. So again, check out my other video for more details about what I think about Disney. So those are my 3 stocks that I'm currently buying. Every time Disney dips down into the lower 100s, I'm picking up some shares. Every time 3M dips into the lower 140s, I need to pick up some shares. And every time Carnival Cruises dips down to the lower 20s, I pick up some shares. For Carnival Cruise Lines, I'm almost about built up. I put in as much as I think I'm going to. My cost basis on Carnival is about $34. So I don't think I want to put in any more, but if it drops lower than $20, I think I might pick up some additional shares just to bring down my cost basis down to the lower 30s. All right, guys, so that's it for today. Let me know if you like my video. Please give a thumbs up. It really, really helps out the channel. I spent a lot of time researching and putting this video together and editing it. So if you find any value, please give a thumbs up. It really helps out the channel. Consider subscribing if you like what I'm doing. And please leave some comments. Let me know if you agree with my thoughts, disagree with my thoughts. Let me know in the comments of any videos that you are interested in me doing. Any ideas, please leave a comment. I'll look over the comments and I'll try to put together a video based on your comments. All right. Catch you in the next one. Peace.